Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Kickstart video. Today's date is April 30th. 30 days after September. April. Only 30. This is the last day of the trading month for the markets. And in this Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar. So let's get started. Well, it's month end, so there could be some wonky type of markets, but we'll start off by taking a look at the euro versus US dollar. We did have employment cost index come in stronger than expected, and that helped us send the euro versus US to the downside. But as you can see, there's a floor developing right near the 200-hour moving average. The 200-hour moving average has come up to meet that floor. This floor and 200 moving average comes in near 1.06874, and the low price came down toward that level. You can also go back to this low right, or this high right here at the same level, which increases the level's importance just from a technical / visual look. I outlined this report in one of the videos yesterday. But obviously, if the euro versus US dollar is going to go lower, and the Fed is on deck for announcing the rate decision tomorrow, with all the comments about things like inflation, maybe employment cost index, the path of least resistance seems to be to the downside for this pair, but we are seeing a rebound back to the upside here off of that support, showing the importance of technical analysis. Traders leaned against that level. Why? Because risk can be defined and limited. If you can risk a little and make more than a little, that's okay in my book from a trader's perspective. So buying here, selling up here is risking a little for the potential to make more than a little. So up at the top side, what we'd want to see is probably the 100-hour moving average to kind of hold resistance if this downside projection is in play for the euro versus US dollar, higher US dollar. If it goes back above that 100-hour moving average, then you scratch your head and wonder what's going on here, and then we'll start to look toward this higher swing area between 107.22 to 107.32. In earlier trading today, the price did move above the 32 level, which was the high price from yesterday's trade. Also near things like high prices and low prices through here. This is where the swing area was initially developed through here before moving to the downside. And we returned back to that area through here. Admittedly, the price got a little bit wonky through this level, but then reestablished its area as resistance in trading yesterday. So getting above that level, but should have led to more momentum toward the say the 50% retracement level, but it didn't, and the price started to rotate back to the downside, helped by the data that came out. So watching the 1687 is the key for the euro versus US dollar in trading today. Move below that level and opens the door for further downside. By the way, we do have this trend line. We have this other swing area down here as targets for that currency pair. Take a look at the dollar versus yen. Of course, we had the intervention yesterday, which sent the price tumbling to the downside. Initially, the price moved down to a test of 200-hour moving average. That's a green line in this chart. We went a little bit below and then bounced back and then rotated back to the downside and fell below that 200-hour moving average. Should have sent the price lower, and it did initially, but then only toward these lows and this consolidation area down through here, and also near the 61.8% retracement of this longer-term move to the upside. Not longer term, but it's April trading range, and bounced higher. So although the price moved below the 200-hour moving average 1, 2, 3, 4 different times in trading yesterday, the price could not sustain momentum below that level, and each of the hourly bars closed higher, including into the close yesterday, where the price also closed above the 100-hour moving average. In trading here today, the price did hold support against the 100-hour moving average, defining and in the face of the Bank of Japan, which was Japan was back from holiday in yesterday's trading. They pushed the price higher, and now we're seeing the employment cost data sending the dollar versus yen even more to the upside. This doesn't look like much in comparison to this move to the downside, but this is about 60 pip move in the last few minutes of trading that took the price up to and through the 43 level. It's not really, I have a horizontal line come across here, but there's really nothing there to really hold the market. Remember, these levels that we traded up to got within about 20 pips of the 1990 highs. If we got above the 160.40 level up here, by the way, that would take the price to the highest level to like 1986, I think. Those are pretty lofty levels here in the dollar versus yen. And there's not a lot here to grasp onto. Maybe if I put a horizontal line at these hourly bars here, we had a high and we had a high and we had a high. Highs below that high, so 158.42. We're still 100 pips away from that area right through there, but things are obviously moving to the upside. Short-term support might be at the 157.23 now level now for the dollar versus yen. It's best guess of any. Taking a look at the 5-minute chart. Actually, this is maybe a better look. Is the 100 bar moving average here and the 200 bar moving average. Note here in trading here today, and I didn't know this until I just put on this chart, but the 200 and 100 held support here. The 200 bar moving average held support here. The 100 bar moving average held support here, as it did here, and more or less here as well. So if the price is going lower, guess what? We need to get below both those moving averages and also below the 100-hour moving average down at 156.27. Of course, those are down at 8. Another 60 pips to the downside here. So there's a lot of room between those moving averages. But if you're a technical trader, if it doesn't go below those levels, guess what? The buyers are winning. The sellers are not winning. So sellers have to win by getting below those levels and staying below those levels. Be aware, be prepared. Finally, let's take a look at the sterling versus US dollar. And this is on the hourly chart. And as you can see, the sterling versus US dollar fell after the employment cost data. What helped from a technical perspective is that, well, the price opened the day above the 200-day moving average with the 200 bar moving average on the 4-hour chart as the next target, but then moved below that level in the Asian session and came up to test that 200-day moving average. It also happened to be the 61.8% retracement of this move to the downside and found willing sellers against that level. And then they got the reward with the employment cost data coming in stronger than expected, pushing the price down toward this cluster of moving averages. The cluster of moving averages includes the 100-hour moving average, the 100 bar moving average on the 4-hour chart. Those come between 124.95.9 and 125.03, and the 50% midpoint of the April trading range, which comes in at 125.035. So the 124.95 to 125.06-ish type level is now supported. If we get below that level, it opens the door for further downside momentum with the broken 38.2% retracement and 100-hour or 200-hour moving average down at 124.55. So that's my technical look at the 3 major currency pairs. Kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.